UBA, Guaranty Trust Holding Company PLC, that's GTCO PLC, Zenith Bank PLC, and Access Holdings have declared 1 trillion naira profit after tax in the first quarter of 2024. The leading Nigerian banks commenced the year with an impressive increase in profit amid challenges facing the local and international financial market. Well, joining us for more analysis is Ambrose Omordion, the Chief Research Officer, InvestData Consulting. Thank you, Ambrose, for joining me today.
Thanks for having me.
All right, well, we'll be looking at 4 banking stocks today: UBA, GTCO, Access Co, and Zenith. Now, we're interested in key performance indicators like interest income, non-interest income, revenue, and all of that. But let us begin with their revenues. What are your thoughts looking at this?
Actually, for me, if you look at the super profit we are seeing from the insurance, from the banking sector, it shows that this is an engine of any economy, anytime, any day. The numbers point out that where the banks are going, and also if you look at Nigeria history, the banks have been so resilient. At the same time, they have supported the exchange. And also, if you look at the number you just mentioned now, or the 4 you just mentioned in the banking sector, it's a clue for investors to know that this is a sector to watch. Despite the plan recapitalization that people are looking at, in different dimensions, I see that if an industry is beginning of these superlative numbers at the beginning of the year, it's a pointer where they are going. And also, if you look at also the structure of new capital base from the CBN, if a bank is taking away its retained earnings, and we are seeing this kind of number coming, that tells that there is a lot of benefit for shareholders of these banks. You can see what happened yesterday at Zenith Bank AGM, where about 4 naira total dividend was paid, about 350 final. Tell you, this is the highest dividend we have seen in the history of banking in Nigeria. Despite that, yes, we are seeing a changing fundamental in the economy and also in the industry from since for almost more than 2 decades. But it tells you that this is a sector that a good investor or an investor should identify with, because there's a lot of potential in this industry.
Well, it's interesting when you talk about potential, but we know what's been happening to investors in those shares in the stock market. We'll come to that conversation, but let's continue. Now, let's have the GTCO results up there. I mean, if we can have the GTCO results up there, I'd like us to talk about this one because I'm a bit curious. Top line is 680.38 billion naira. That's revenue. Profit before tax is 509.3 billion naira, while the profit after tax is 457.13 billion naira. Now, I want to make a comparison here, comparing that to Access Corp's 974.2 billion naira revenue and 159.3 billion naira profit after tax. How do you explain this? Cost optimization, prudence? What happened? What magic are we seeing from GTCO? Actually,
for me, this is a kind of revolution in GTCO. This is a change of dimension that investors are looking at to see if this trend will be sustained in GTCO in their second quarter. And I believe that that trend will also be sustained. Why? If you look at the factor that brought about this figure in GTCO, they are very clear. You have seen that the government policy in terms of monetary policy have impacted all the banks. You have seen it in their net interest income. But because of the banks also have been what we call a holding structure. If you remember, before the Soludo recapitalization, most of the banks are having universal insurance, universal license. That means they can do other business apart from the banking business. Then you saw the impact on the banks almost like 2 decades ago, or let's say a decade plus. Now we are seeing that banks in Nigeria are directly going back to such structure again by coming up with a holding company. That means in the holding company, you have insurance, you have stockbroking firm, you have issuing house, you have other business to do, you have payment platform. That has kind of imparting GTCO. Don't forget that this is a bank that last year has touched as low as almost 18, 19 naira before rebounding to where it is. It's because the numbers are looking up. Yes, for me, it's a trend that is happening in all the banks, but we have seen exceptional work in GTCO. But if this trend is sustained in Q2, it's a pointer to what's going to come out from there. But also, you look at assets you just mentioned. If you look at the company gross earnings, it's very, very important. It tells you that Access is already a bank to identify in terms of gross earnings. As we speak now, GCON is a good one leading in APAT for the Q1, while Access is leading what in the gross earnings. But one thing is very constant that you have not mentioned, okay, we'll come to that period, I don't know. Look at Zenith Bank. Zenith Bank has also a good top line, which is almost 780 something. But one thing is that consistency is very, very key. In Zenith Bank, every quarter and every year, they grow their earnings for past 22 years. That is that bank is astounding. That is why in the last 7 years in Nigeria, they remain the most profitable banks in terms of what profit. And that is why their payout has top all the banks in Nigeria, so speak. For me, as an investor, you look at what is going to drive your earnings. Earnings is what determine dividend to be paid or profit to be paid at the end of the day. For me, we have seen where GTCO is going, we have seen where Access is going, we have seen where UBA is going or wasn't it. That's why I said, for investors that are resigning in Nigeria, I think this sector is where we're looking at, because if you look at the structure of recapitalization I've just mentioned earlier, they said that retained earnings will not be part of this structure. And these banks have almost 2 trillion in their retained earnings. And this money is for the shareholders of these banks. And these banks are coming back to the market to source for fund, either in form of right issue or public offer. If they are doing right issue, that means they want to sell share to their already existing shareholder. And for them to buy, and then giving them a good dividend that started already. We have seen it in their, in their full year ended 2023. That means as we are looking forward to see,
Let me come in here. All right, I sort of really wanted you to tell us, the magic that GTCO did to sort of reduce, the margin, basically. But let's
go there. Let's go there.
In less than 30 seconds.
Yes, quickly. Okay. If you look at GTCO result, I said look at the interest income, look at the trading income. Trading income is exceptional, and also their own SFS revaluation also have impacted, which other banks did, but because GTCO has entered into what we call a holding company, now is the first time they're having harvest for that holding company. For me, it's a plus for them. That's why I said, since other banks are going to a holding company, we're going to see more of this result in their second quarter if this high interest regime is sustained by CBN.
All right, so what happens if this interest regime isn't sustained? But before we get there, let's talk about the income mix of these companies and what you make of them, from the interest income to non-interest income, fees and commissions. I want to have your thoughts on, the mix, sort of, because we see that the interest income is definitely more than the non-interest income. What do you make of it?
It's a simple logic that an environment where you have 24.75 as what interest rate, and you know that these banks are the one that has the kind of fund to trade the money market, and also that's where they are playing. Have access of investing in Nigeria Treasury bill, even though the banks are not lending to the public as we speak now because of all the headwinds in the economy. They can easily be buying government bond or Treasury bill. On that note, God could earn big money, but you and I that are earning 5 million, 2 million to buy. No, but the banks will put billions into Treasury bill. At the end of the day, they're going to earn. And that is why most of the companies outside are complaining of because high cost of borrowing is high. And for that, because it's high, the banks also want to risk having increase their non-performing loan. Because if you are lending to an environment where it's hostile and the people are not paying back, automatically your non-performing loan will go high. For that, the banks have taken another way of trying to how can we safeguard depositors' money by not having a high non-performing loan. Rather,
Ambrose, I like what you just said, because that's my concern. What happens to the financial intermediation role of these banks if we are not seeing enough credit to the economy, to the private sector?
Anywhere in the world, you can see what is happening in China. China cut their interest because they want to push the economy up, and that is why both their fiscal authority and monetary are working on. But here, I see that the monetary authority is increasing rate. It's not the fault of the bank. It's the fault of also the regulator. The banks have to protect you, my money, and your money. If they lend your money to the public and the company is not able to pay back, at the end of the day, where will the bank pay you? That's why a bank has what we call risk management. That's not managing what is happening in the economy. It's not done on the government or the monetary policy to do that. If you really want to drive the economy anywhere in the world, you don't depend on foreign investors to come and drive the economy. You are want to make funds available so that your economy have access to cheap funds so that they can expand their business and employ more Nigeria. That will oil the economy generally. But if interest rate is high, I'll tell you, we're still going to see all this headwind in the economy, because you can't go for a loan for about 32% rate and want to do business with that. No. Oh no, for me, that's why we are seeing even people are not even assessing, are not even approaching banks, because the rate is high, because you must look at the basic or the benchmark of the MPR.
All right, we've seen the impact of the rising interest rate and fixed income yield, which you've also talked about on the result of these banks. Now, what should we expect? I mean, I'm just looking at a situation where the CBN sort of loosens up its policy. Are we still going to see this triple-digit growth we're seeing across the board, especially for the Tier 1 banks?
You said a missed income. That means they are not depending only on one source to make money. If they do that, that's why they are becoming a holding company. They are doing trading. They have insurance business. They have a top booking firm. They have issuing house. No, they are going to do a lot of things. They're going to have a payment platform. This generates money for the bank. The banks know that the only way to survive is to go back to their universal license they have before indirectly. That's why the holding company, is coming up. You can see that many of the banks that are really serious are going to, because they know that that's where they can earn money apart from the banking activities.
You know, I'm looking at the time now, and I feel like before I let you go, you're a technical analyst. So I want to ask you this question. I'd like you to talk to us about metrics that you think every shareholder or investor should pay attention to, and, you know, what you make of them. In analyzing, in doing a comparative analysis of those companies, what are the metrics you think shareholders should pay attention to, and what you think of them?
No, because there are many financial issues to look at, but the most important one for me is that look at the company top line. That top line tells that if the company is expanding their business, when the company top line is increasing, that means that they are entering either new market or they are producing new product. At the same time, look at what they are the last one, which is the profit after tax. That means after they have taken their cost of running the business, they pay government tax. The what's left for you and I, that is what we call it profit after tax. Then that will determine what they pay to it. So an investor could go back and see what is their profit margin. It's very, very key. How efficient is this bank? Like we just mentioned, if you look at the 4 banks we have mentioned earlier, the most efficient bank is GTCO, because GTCO, profit margin is about 67.12. That means out of every 1 naira they're generating in their top line, they're retaining about 67 kobo as profit. That is huge. But that of Zenith is about 33. That means in every 1 naira, they're retaining about 33 naira as profit. These are the things that regular. These are the what called efficiency ratio that will guide you. But the most important is that top line and bottom line, which is what the profit after tax. Don't divide with the numbers of shares. It tells you any per share. Any per share is just for you to know if they are sharing the money around every shareholder or will come to you. It's from there that we determine whether dividend will come or not. That's why if you're looking at other financial ratios, we are doing a lot of work. But look at this trade ratio and also go back and see what is their operating cash flow. It's very, very key. If a company price of any company is looking up, as earnings is looking up, that means that can be sustained. But if operating cash flow is looking down and earnings is looking up, it's a matter of time, it will follow the path of operating. That means these are the 4 things serious investors should look at when we are looking at company financials.
All right, let's close on this. I'd like you to speak to us about the balance sheet of these companies. How well structured, diversified, and resilient do you think they are? And who for you are the leaders? In less than a minute. But
for me, they are having a robust balance sheet. But in terms of assets, you can see that Access Bank in terms of assets. But in terms of net assets, we can give it to Zenith Bank. But net assets that is shareholders' fund, they are still leading. But in terms of total assets is leading. But one thing that the balance sheet of these banks are robust and we're very strong to support their expansion. That's why when they say that the banks need about 500 billion to capitalize, I know that most of the banks, especially the first-year bank, will have access to it with ease. Because if a bank has a retained earnings about almost 2 trillion, even though you are paying it back to your shareholder, when you come to the market to raise funds, they will patronize you because we already have satisfied them, we have made them happy. For me, that's why I'm not panicking about capitalization, because I know that Nigerian banks are strong and solid. With this one, we made them more stronger to drive the $1 trillion economy that the government is envisaging. For me, it's a good one for Nigerian economy, a good one for investors, a good one for Nigerian banks.
All right, thank you so much. Ambrose Omordion, Chief Research Officer, InvestData Consulting. Thank you for your time.
Thanks for having me.